data doesn't show that. I think what has happened over the last 5 years across the MENA region and across Africa is a recognition from financial investors that these sectors, which are inherently defensive and therefore have attractive attributes for certain types of investors or operators, it's worth investing in. At the same time, and we had this conversation, Mohammed and I did earlier on, if I think about in both of those sectors, but especially in very different ways, over the next 5 years, it's really about being more creative and innovative on how you think about the sector, the segments within the sector you play in, and how you actually execute against that. So I think some of the easy money has been made already. Not much, but some. Folks like Sira have done incredibly well, right, with this listing, and that's created some positive sentiment and some confidence. But I think on the whole, it's still a very new asset class, if I really think about it, and it's going to change. If I think about a few different trends that will be, in my view, essential for investors to think about. The first is think of both healthcare and education from a segment point of view. They're big spaces, pick your spots, be good at whatever you decide you're going to do. Returns are very different within each of the segments within healthcare and education. Second is, I think these are essentially infrastructure businesses, and over the last 5 years, we've seen investors being able to look at the PropCo returns separately from the OpCo returns. We've never had an opportunity to really deploy capital with the recognition of those different disparate parts of these essentially defensive industries. I think increasingly that becomes an opportunity. The third is, we tend to have operators and investors who stay very close to markets that they're comfortable with. And in that sense, that's good. But I think folks like Sira and GEMS and various others, if you look at NMC, for example, on the healthcare side, the bold have decided to think beyond their comfort zone. And when they've done that, and if they've done it properly, they've created and generated equity value. I'll stop there. I could talk endlessly about this.
Stop there, because there's a couple of points that we'll come back to. But before we move away from that, I'd like to dig a little bit deeper about why we're not seeing that investment. Because from a demographic point of view, education and healthcare should be two areas that should be booming. If you think about sort of the age of the average population in some of the emerging markets, it should be. If you also think about the rise of the middle class and the disposable income that we're seeing, that should actually be invested in healthcare. So why is that not happening? Why do you, on the one hand, have the demographic shouting out, yes, these are sectors that should be what, but on the other hand, that investment not coming through?
The simplest way I can answer that question is this. And again, we're talking about healthcare and education. Whilst in our region we tend to think about them similarly, they're actually very, very, very different. Right? But the simplest way I'll do this, if you think of healthcare, you have a patient, a payer, and a provider. If I use that exact same lens for education, you also have a student, a payer, in some cases it's a government payer or a private payer, and a provider. What we've historically focused on is providing. The key dynamic that really needs to be paid attention to is the payer dynamics. Affordability is the biggest issue. So you're absolutely right, that demographic potential, and if you think about it from Egypt's point of view, it's unbelievably compelling. If you look at the demographic dividend opportunity in Africa, statistically, it's unbelievable. But how do you actually access that? And I think the key increasingly is focusing on being able to deliver good outcomes for the right price. In both healthcare and education, a lot of money has been made by creating the infrastructure to provide care, to provide education, and the initial money has been made on the higher end of the payment cycle. But the people actually need it across multiple levels and for multiple needs as well. So I think the days of just focusing on making money from provision of healthcare and education is changing. It's very much about trying to figure out how to align all of those, focus on the segments that make sense, move into new markets that create that opportunity, and I think that's much harder work than the alternative.
Thank Thank you very much. I'd like to bring in Gary Mahmoud. Talk to us about your clients. Where do they come from? What are their sort of deal drivers that push them into saying, you know what, these will become areas of investment for us? How much of it is it actually a long-term plan that they're talking about? Jeremy spoke about, you know, you need to look 5 years into the future. How much of this is something where they say, you know what, we want to get our foot into the door right now with a long-term plan, with a long-term vision? And how much is it something where they say, we want to make an investment right now and we want to see returns on that investment within the next couple of years? Mahmoud, maybe first you.
Let me first start by saying healthcare and education are, there is real demand in the market. They are not luxury, they are necessities. And there is real demand in the market, first because the markets are underserved in terms of number, for example, of hospitals, beds, schools, occupancy is very high. And second, there is a demand for better quality, because in both healthcare and education, quality is important. And you don't have a lot of choices. It's regulated markets, and the regulator has to take into consideration not just providing the service, but also the quality of the service provided. So there is demand. But looking at the market, as you said, demographics, for example, being 100 million population, this means there is a lot of demand. I don't think this is completely accurate, because our market is not, I don't see it as one market. There is a market who can afford for the services, and there is a market who cannot afford for the services. So when it comes, for example, for international schools in Egypt, I cannot say we are 100 million population, so there will be demand and people come and invest in open schools, and it's different. I think the market needs to be segmented, especially in the education space. On the healthcare side, demand is more clear, and I think it's more open to investments from the private sector. Still, most of the Egyptians, or the majority of the Egyptians, is paying for their healthcare services in Egypt more than 50%. The government is only paying less than 50%, which is for a poor country. It should be the other way around. And the government is trying to implement, or have actually announced a program, a universal healthcare program that started this year and will extend to 2032, which should cover more 100% of the population. The demand we have seen, I haven't seen a lot of demand for especially M&A in the education sector, but what I know is there is a lot of investments going, especially in the middle class segments, schools, K-12 schools, and schools directed for middle income. It's opening every day, so there is investments going, but I'd say mostly coming from inside the country, not coming from foreign investors. And I think it's partially because of the regulations, local know-how in dealing with such sectors, especially on the education, is important. And I think local investors have more experience in dealing with it. They have been in the market probably with smaller entities for a long time, so they know how to deal when it comes to how to deal with financials and fees and those things, which is really on the healthcare. We have seen more investments coming from abroad. I'd say in the pharma sector there have been some acquisitions. 10 years ago it was more than 15 years ago, and 10 years ago the appetite or the activity of financial investors and private equities was more. It is still there. It's on the top of the list when it comes to sectors, but most of the acquisitions, I'd say the good acquisitions, have been done by strategics, companies like Hikma, those companies. I think they have done most of the acquisitions in the past. And I'd say also private equities have not, some of them have not. We always remember who have made money, but we forgot who have lost money or who is still stuck after 12 or 15 years in an investment and he cannot exit and he changes advisor every year, do a process every 2 years.
Thank you very much, Gary. Do you want to shed some light on sort of your perspective when it comes to what your clients are working on, what they're looking at, and what's driven them into this particular space?
Yeah, well, I think to begin with, I'm just a little bit uncomfortable now because I'm a lot more cautiously optimistic than Jeremy is, and he's an industry expert, so I should defer to him. But what he said about healthcare being a defensive sector does not at all align with what we're seeing in terms of how our clients are doing things that have been happening on the ground. And most of the transactions we've been involved in, a lot of it, we've got a sort of two-track involvement in the sense that there's been a lot of interesting big strategic moves that we've been doing, with a view to sort of really rolling out not only infrastructure but also all the surrounding supporting services that go about. For example, you start with an anchor hospital and then you acquire a whole bunch of clinics to serve as a catchment to feed your hospital. That's very aggressive strategic moves.
And are those clients of yours that are pursuing that sort of strategy? Are there people locally, or is it international firms coming in, recognising the opportunity here and wanting to get a foothold early on?
Well, it's actually a mix. So if you look at stuff in the UAE market, which I'm most familiar with, we've had 2 listings on the London Stock Exchange of healthcare companies, which is a big, quite sizable listing, which is MMC, which was a listing in London, which had a lot of foreign investment.
Which is today a FTSE 100 company, right? An exceptionally great story. Which unfortunately we didn't get the legal fees on that, but we did do the Al-Noor listing on London Stock Exchange, which was basically a hospital asset based in Abu Dhabi. We were also on the sell side recently when NMC made a very sizable $500 million US dollar acquisition Al Zahra Hospital in Sharjah. And so what we're seeing is people really trying to position themselves strategically against some large players. And on the lower tier, we've got a whole bunch of people coming to us for help in all the intricate, tricky red tape that goes around medical regulation, and all the labour licences are held, and they'll only give licences to flesh and blood people, this sort of thing. And we have to navigate all these things and explain them to the UK Listing Authority, which isn't easy. Having said all that, I basically don't think, if you define healthcare widely, I don't see it as a defensive sector. I'm an industry expert, just a word, because of the fact that healthcare expenditure is just going to continue to rise everywhere. And we're still in this region a long way behind world sort of benchmarks of what they're spending in Europe and all that. And there's a lot of government policy tailwinds pushing more money into the sector. I'm referring to compulsory insurance, and particularly in the Gulf countries, the government's also sort of underwrite Mercedes level of healthcare for their own nationals. So yeah, I'm probably wildly optimistic.
We'll watch this space. Mohammed, I'd like to bring you into the conversation. Obviously, you are one of the success stories when it comes to the education space. Tell us about sort of the attractiveness that you see in the sector, and then also sticking with this theme of investors coming into it. How much competition do you feel yourself under, or are you actually so established in the market that it's going to be difficult to unseat you?
That's definitely a good question, but I mean, let me try to reiterate some of the stuff that has been said here. Point. I think the first thing when it comes to, and I focus on education, this is where I really, what I'm doing, is there's a lot of education that needs to be done on the side of the educators and operators, as well as the side of the PEs working in this business. Our experience over the past...
Can I just interrupt you? You mentioned PE. I mean, is this a PE play? Is this sector actually something where...
This is what I'm going to tell you exactly what happened. So basically, we started our journey almost 10 years ago. Whether we're working with DFIs or the likes of Abraj or now with the market, and even with the regulators themselves. In this part of the world, there is a lot of lack of knowledge of how can you match this industry with the current financial patterns and financial notices going around. There is a lot of education on both sides. You have to realize that governance becomes the biggest issue. Why? Because all around this region, most of the ownership within even healthcare and education is strictly classical family-owned businesses. These are families who got used to very high returns, positive cash flows. People have been sitting on heaps of cash. They knew their game quite well, and for them to move to the next step, there have to be a lot of derivatives moving forward. And for them, a derivative is not an interesting 5 years plan or an expansion plan as you can see forward. It's not easy to tell them to move forward because it's a very comfortable position. And then once you even get them to move forward, you get hit with the government structure. Because at the end of the day, education, and I want to recite this, it's not a nice building, it's not content, it's not access, it's human-to-human interaction. You have to realize this is one of the highest human-to-human interaction businesses in the world. On every day, you're existing on human-to-human relationship with your client, with your regulator, with your community. So the main wealth here is the ability of management to exist in high intensive human interaction on daily basis, and this is insane. Think of yourself, you wake up in the morning, I just try to switch the seat here. You wake up in the morning, since 5 a.m., and if you have a family, you have one kid going on the road to school, you're a bit worried, are they going to arrive, did he arrive safe? Think this will be in the thousands. And then you continue the day with every single student in every single place, there is a risk of an injury, of a problem, of a complaint, and then when this got multiplied by the thousands, it becomes a much larger platform to take care of. And then at the end of the day, you deliver everybody back home. This happens in high ed, this happens in K-12, it happens everywhere. This is the wealth of the operator. And this is the value. I think that's one of the main areas that people need to take a look at. The problem is a lot of people now talk about the infrastructure, the assets, the numbers, but that's the core. If you get the babysitter to your home, you dwell a lot of time to think about who's going to come and spend a few hours. Think of who's going to spend the whole life of your kids. Probably can see them much more than families do. And that's why this element of relationship, of reputation, of trust, of human-to-human interaction is what you effectively buy into. This knowledge is still not shared between both sides, because at the end of the day, you see people sitting on both sides of the table, and the discussion becomes how expensive is this building, how many schools you're going to roll out, how many faculties, how many are going to graduate, what's the hike. It doesn't happen this way. It's a bit more complicated than that. So I think on the side of, it's very important that we have to always stress on this point. And that's why I think a lot of deals are not really moving, because the two sides don't see the same picture. That's one.
If you follow that through, then really education is something where we should never see these massive organizations, but actually we should see smaller family-owned businesses staying in control. Because in that case, I mean, it's difficult to see if you're running, you know, 30, 40 schools with thousands of children, how are you ever going to ensure that human-to-human interaction? Whereas obviously if you run an individual school and you're on site the entire time, you can build up that relationship.
And here comes the second part, because that's a system and a knowledge that you build through the years. So look at the models we've seen in Latin America, for example. When somebody would come tomorrow and tell you, I have 2 successful schools, I'm going to roll out 50 in the next 5 years. That's a trade to do, and I'm telling you that. Because it comes after time. Like for example, what Sira did, and I think was very successful, every 5 years we kind of up our growth patterns in a very realized way. So is this an industry where you're on cheap, you can see this growing very fast? Yes. Would this actually happen on ground? You have to be cautious about this component. So it's a very defensive industry, amazing cash flow cycle, but growth have to be done within the limits of the industry itself rather than do it on a piece of paper. So I just want to be also very clear on this. And that's a very important point to differentiate. It's not as easy as we can roll it out. It's doable and it's growing. But Latin America, South Africa, when you move from X to 10X, you started having problems. From X to 3X, yes, it can be done. So as I say, it's an industry of sustainable growth.
Jeremy, I see you itching over there, wanting to continue.
No, I agree completely with what Mohammed just now said. What I alluded to earlier on, where I said I don't think the market is necessarily hot, wasn't to suggest it's not attractive. It's very attractive. But it's attractive in the way that Mohammed said. I think the opportunity to take a traditional private equity focus, certainly to a K-12 education, is very limited. It actually lends itself much more to permanent capital, very strong operators, and a separation of property and operating returns. That's K-12. In healthcare, right to the point that was made earlier on, if you have a significant hospital network, actually you would be relatively naive to add more hospitals. In fact, what you should do is create an ecosystem of clinics, referrals, and so on that allow you to differentiate and diversify the risk that you have on a single hospital, right? So if you think about it, even though NMC acquired Al Zahra in Sharjah, which was a hospital acquisition, some of their most recent investments have been in IVF, for example, right? And therefore creating a differentiated proposition. I think organizations like CIRA or GEMS and so on and so forth really have to think about segments within education that provide more value for them and become really good at operating within those segments. If you look at the way I think a lot of investors will have to think over the next 5 years, is to really think about the different challenges in working within certain segments and what are the different returns profiles within that. So if you look at it, CIRA with a nice 20% pop post-IPO, I think what, 22 times EBITDA now? Yes? Super impressive, right? And I say congratulations for that because it creates a lot of positive sentiment. At the same time, there's very few listed K-12 school groups globally, right? North Anglia delisted from the New York Stock Exchange. Cognita did do a listing, they got sold to Jacobs Holdings. There's a couple, Kuro for example in South Africa, but not a lot. But there are a lot of listed education businesses that aren't K-12. University businesses, ed-tech businesses, and when you look at the valuation differences, they're extraordinarily varied, right? So if you look at the largest 15 Chinese listed education companies, this is a highly regulated market, right? Trust me, when China deregulates it, you'll hear a big sucking sound, right? Which is every teacher in the world going to China, right? Which creates a lot of challenge for what we have to do here, right? But if you talk about compelling demographics, there's nothing like China, right? And the reason why we have such a large private education market here, especially in the GCC, is because it's not as regulated as China is, right? And as soon as they deregulate, you'll see that difference. If you look at the 15 largest listed education businesses in China, they have an aggregate market capitalization of close to $50 billion, right? Yet, if you look at our region, with a few exceptions, like CIRA, there's very few that have done that. GEMS postponed their IPO, right? So I think anyone who's really thinking about MENA markets and African markets really have to pick their spots, develop really strong operating capabilities, and don't think about home running.
Can I just, now, on the second point, I was just going over the cautious part. Now, the interesting part is, if you take a look at Egypt now, you know how many students we have in grade 12? It's 820,000 students. At kindergarten 1, we have 2.2 million. So Egypt's population pyramid is crazy when it comes to education. Is there a market? There's a massive market. And the question when we invest is never, is it going to succeed? No, it's about when it's going to get returns. So it's always a guaranteed investment going forward, and there's always a demand. But here's come the interesting part. Which, like exactly mentioned, which demographics are you really targeting? If you take a look at the segment all over the region, specifically in Egypt, the focus have to be on the middle class. Most of the private sector investment, even with families, happen in the boutique line, which that deals with 1 to the 3%. It's 1 to 2 schools, deals with the rich, caters to the rich, and it's always about the image of the family and the image of the founders. But the biggest demand in this country, and it's what's happening and appearing now in Saudi, what we're seeing happening in the UAE with all the restructuring is, it's the middle class that's close in the middle. With the current economic conditions, they cannot afford the boutique service, and by all means, they don't want the government service. So that's the class that is highly in need of rolling out investments and rolling out service. And we talk about middle class in this part of the world, we're talking about probably 100 million combined between all of them. So it's outstanding in terms of demand. The question becomes, how can we roll what is needed rather than what I personally perceive is my level of education? So you enter schools and investments, and I've seen a lot of this with PEs, including some we even worked with before. You have all of these new schools with swimming pools and activities and facilities and activities. Is this what's needed now? No. What is needed is decent campuses done with a proper equity, with base security, but gives as much education as you can, because that's the demand in the market. Middle class educated generations, but nobody's focusing on this now. And that's why I think Sierra had ample opportunity to grow within this sector, because simply no one was really focusing. So everybody, I mean, I said, whenever I opened a school, everybody said, why do you open the school for 12, 13,000 Egyptian pounds? Can't you do a school that is for 150? I said, I can do 150. I said, why don't you do it? And I said, because there's how many people can pay 150 in the next 3 to 5 years? And during the financial crisis, the first thing people did is trying to look at the level below when it comes to education, because in this part of the world, education and healthcare effectively constitute 50% of your actual income. Think of how much you pay to your kids at school, how much you pay for healthcare, a bit of entertainment, and that's probably most of what you make around here.
Mohammed, if I could just interrupt you, one of the things that I'd like to get out of this conversation is how much of these education and healthcare needs will be able to be satisfied by local players, and how much is this something where we are going to see international players coming in? Because there are obviously operators who are successful in other parts of the world. How much will they be able to get a part of the market share, or how much is this actually something that is going to be solved by Egyptian suppliers and providers?
Here's the interesting part. So when we're talking about global operators, take a look at the average tuition fees mostly around the world. How many global operators that you know charge $600? So that's always the equation. That we have seen the likes of global operators move into the market, but by merit of income, they always move into higher segment. So unless they manage to link with the local play and open this branch of affordability, it won't work. So I think the best bet for global operators is to try to find the proper local player, upgrade the game, add in a bit of the management savviness, and try to get them to scale down. But operating directly, once you have a single expat moving into a school, move into a different bracket market. So that's why I think it's going to be a limitation. The space at the top line is almost getting filled up. So you know, a lot of schools within this top 1 to 3% are operating at 40 or 50% utilization. But if you take a look at the middle segment, we're talking about 125% utilization. So that's it. So local operators need to keep an open mind, an open view. We're even in discussion with a couple of them now. A lot of them are interested in this one new R&D component. How can I make sure that my educational facilities can go into a lower segment? So if they get out of their comfort zone and think of affordability, yes, Egypt becomes a massive playground. If they stay within, then they miss the market.
Mahmoud and Gary, can I bring you in? Obviously, Jeremy and Mohammed have made a number of interesting points that I feel anyone wanting to enter the market will need to consider. How much are these points that you've heard and you've spoken about in your conversation with your clients that are potentially interested in entering the market? How much are these things that you're like, actually, those aren't things that we've considered or our clients are actually actively considering?
I think for international players in the school space to come to Egypt to operate independently and roll out schools, I don't think we'll see it. I think the development of the sector will come mainly from the government and the existing local players. Potentially, if we want to increase the contribution of the private sector, we shouldn't be waiting for foreigners to come. The maximum that will happen is some financial investors, or as Mohammed said, one of the big players will come to either to invest in an existing company, provide them with funding to expand, or have a partnership, but we will not see a lot of contribution coming internationally. The government can expand. They have some ideas about PPP projects to open more schools, because the government understands there is schools, a lot of schools needed. But of course, the government focus is mainly decreasing the capacity in classes, opening schools in new areas, but the focus on quality is a bit higher shift, which comes to the private sector responsibility, and most of the cases worldwide, the government, because Egypt is also not different in the education. The government can provide some incentives to private sector if they realize that at the end it's their own responsibility and no one will come from abroad to help or to invest. They are waiting and expecting. could be related to the quality of service provided by each one. I think also the government needs to help. There is tough regulations on fees, on curricula, on everything. But what's really missing is more transparency to local investors in terms of changing regulations. The rules is there, but with every incident, devaluation, complaints, things change. There are some extensive regulations, like the government can put the schools under its direct supervision or management, but I think this is required given the current status of the market. Potentially in the future, I hope to see this removed, or the threats of this, because it's important for investors to work while they are feeling a balance of power with the regulator and more support rather than fear of punishment.
Brilliant. Thank you very much, Gary. Can you maybe share some experiences from your side of the table?
I think you will see more international operators come into the region. We're seeing it already. There's basically a queue of people formed at the Saudi border for when they deregulate things over there, and also one of the big problems in the Gulf is that if you want to run a school, you've got to have reasonably fancy facilities if you're going to charge very high fees. And there's extremely draconian restrictions on ownership and even long-term leasing of land in most of the Gulf countries, which makes it really hard. But I think what will happen, my personal opinion is that we're seeing international global brands basically proliferate everywhere. So all coffee shops used to be family owned, now we have Starbucks moving in on every corner, and I think that will happen to some extent. I think global educational brands will come, and I think what will happen is you'll get a hotel management model, like the Ritz-Carlton operating this hotel with someone else owning it, and that's basically what will develop. I think that a harbinger of things to come was actually last week. I understand the Egyptian government signed an MOU with the UK, with Germany, to basically allow branches of leading universities from those countries to operate here. So there's obviously an active government policy to bring those sort of global brand names into the educational market here at the tertiary sector level.
Thank you very much. Now, I'm mindful of the time. So I'm going to ask the panel one more question, then I'll see if there's some questions from your side. Now, I think we've made the case quite eloquently for why it's an attractive sector, why we are expecting, with varying degrees of optimism, activity to increase in the sector. I'm keen to hear a little bit about the downside. What would have to happen to stop this investment from coming through? Are there any challenges that investors need to be mindful of, be cautious of, take into account before they make that commitment? Jeremy, do you want to maybe share your insight first?
I'm going to borrow Gary's mic. I'm not going to take anything personally because I suspect somebody might have switched me off. So, as I said earlier on, if I characterize the market as attractive as opposed to burning hot, then clearly there are challenges, right? So what are the challenges? And let me also say one thing to Gary's point. No matter what anybody can say, the best players in the region, in both healthcare and education, are homegrown brands, right? So whilst we have interest, that's not what the market needs. What it needs is good operators who know what they're doing and are familiar with their market and can scale. So what are the issues? Issue number one clearly is regulation. In education, the curriculum is something that is considered to be part of a public policy agenda, and that's one of the reasons why there are limitations of the growth of K-12, especially in Asia. Right? Vietnam has only recently allowed private schools to accommodate 50% of their enrollment with Vietnamese nationals. Even in Singapore, a Singaporean national needs to get permission from the ministry to go to an international school. We tend not to have any of those restrictions in the Middle East and Africa. So any change in regulation could be adverse. To Gary's point, actually, positive change in regulation will spur growth. So if this idea of an infrastructure mentality towards a school changes, right? I'm a parent, I have 4 children. you evaluate the quality of your child's education every day at dinner. You don't really care how big the swimming pool is. What happens in the classroom matters more than anything else, to Muhammad's point. And some of the inhibitor to new ways of delivering both healthcare and education is actually regulatory burden. The reality is when you read all these press reports that extrapolate the number of beds that have to be created in Saudi or in Egypt, or the number of new schools, honestly, even if that capital was there, the land isn't, right? And access to that land is a very difficult challenge across all of these markets. I think once the regulators partner with operators and allow innovative ways of delivering outcomes which aren't focused on the infrastructure, that'll create opportunity. The converse to that is if they don't, it limits opportunity as well. The last thing, and this is to Muhammad's point, if you change your mindset from an infrastructure mindset to a services mindset, human-to-human interaction, actually the biggest challenge you have is the supply chain of people. And if you look at it across all healthcare and education, at a certain point, it's going to be increasingly more difficult to hire the right physicians, the right nurses, the right teachers, the right heads of school. And we don't really have a particularly effective way of taking people within the region and moving them into those workforces. So let me use an example. If you take the UAE, for example, it's very hard to get a physician license if you haven't had very specific things that qualify you for that license. X number of years of service, a degree from such and such a place, and so on. Hospitals in the region really struggle with finding good professionals. We recently did some work in Serbia. Serbia has an exceptional healthcare academic system, but 80 to 90% of physicians who graduate out of their universities go to Germany. Why? Because they make 6 times more money. Now, when they go to Germany, they have the unfortunate requirement of having to learn German, which in and of itself is a challenge. But once they invest the time to do that, they stay there. Now, in theory, providers here can tap into sources like that, where you have much higher, let's say, consistency of a labor pool, and integrate that into your model, either by creating a career model for the people who are in your business, or finding a way to find them more cost effectively. I think a lot of investors particularly have just focused on putting the building together. But the resilience in your labor and skill supply chain is definitely a big risk.
Brilliant, thank you very much. Gary and Mahmoud, maybe a few comments from your side about the challenges that investors might be facing.
I want to comment on this, people taking care more of buildings. This is a very good example to what happened in the pharma sector in Egypt over the past years. We have now 115 companies producing pharma, while like 70% of the market is controlled by the top 20 companies. So most of the other companies were built to be sold, but actually they have built it in a way and GMP standards which does not qualify for any foreign buyers to buy them, and they still working on registrations of drugs which is not being sold, and all what they are hoping for is they will sell those companies and make fortunes. While I think most of those companies at the end will disappear, or people will buy only the products and leave the manufacturing facilities, and I have seen examples of this happening. People who are built factories, and at the end people came to them to buy only the products, and they say, we don't want, leave it, you will pay the full value, but we don't want the increase, we don't want this manufacturing facility. So even in healthcare, I think there is a lot of focus on buildings, on machines, while people are totally underestimating the quality, which is, in my opinion, especially for private equity investors and for financial investors, is a very important factor when you are exiting. If you want to include strategics who know what to do, and they have standards and they have long experience, they will know it in the first 5 minutes that this hospital or this manufacturing facility or this lab cannot operate. But some of them are making money, but when you are selling to a strategic, they don't only look to EBITDA. They don't care. They will make the EBITDA. Yes, it's important, but also they look for a long term.
Thank you very much, Gary. A few words from your side, please.
Yeah, I think there's quite a few key